What's interesting about this chart, and I think I touched on this last month, is the idea that when we look at the Fed funds rate, which is going to be shown in the white line, they've basically converged. It's at 4.5%. We've got the 2-year Treasury yield at 4.44. So we have this phenomenon now where the 2-year Treasury market, which for all intents and purposes is the market's best guess of where interest rates will be in 2 years from now, it's currently at a discount to where the Fed funds rate is. What's that mean? What that basically means is there are people in the market who think that between now and 2 years from now, the Fed is not just going to have to slow or stop hiking interest rates. They may even have to bring interest rates back down. Now, why would they have to do that? This is the good news, bad news thing, which is if the Fed is decreasing interest rates, it's probably because they're beginning to see things break, or the optimistic side is they are rapidly seeing inflation come down. Now, my personal belief is if inflation is coming down at a very, very rapid clip and they actually have to decrease rates, then that probably means we're starting to hit a little bit of a panic button, and they're trying to actually stimulate the economy rather than cool it off, which is the stance they're in right now. But the white line is going to be the number of job openings that are currently available, and you can see on a 22-year history, it's come off from its peak from 12 million people down to 10.4, but it's remaining stubbornly high, despite the fact that we have massive rate increases of 400 to 500 basis points. We have a Fed that's literally trying to cool down the employment picture, trying to cool down wage growth. But despite all those facts, we still see job openings remain at very, very robust levels. Similarly, what we're looking at here is what's called the quit rate. And it's put together by the same entity, which is the JOLTS entity. And what this ultimately looks at is the percentage of people that are leaving their job to go to another job of employment. And the reason why this is interesting is in this environment, you would think that people would be a little spooked that things are softening, they're a little scared to make the move to another job. Well, if we look at this historical basis over the 22-year period, again, yeah, we've come off the absolute highs of people being willing and able to quit, but we're still extremely high, which means that the labor force is still feeling quite confident that they can go out and not just find another job, but in all likelihood, probably find another job at a bigger increase than what they could get by staying at their existing employer. So this is not advice to go, leave your employers and bail on Ryerson or bail on your manufacturing company. But this is certainly a phenomenon that is going in the face of what we're seeing in some other aspects of the economy, which is the jobs market is just quite strong and quite resilient for now. I promised Mike I was going to put on my meteorologist hat today. This might be a little bit of a busy chart or difficult to understand, but I'll try and run through it real quick. The white line is ultimately going to be your 30-year average of Western European temperatures. As you can see for this time period is somewhere right around 4 degrees Celsius. The yellow line is what we saw, what we experienced over the mid to late December and early January time period. As we were discussing this potential looming energy crisis as we were coming into winter, the one caveat to that entire energy crisis thesis was if we have a warmer winter, this might not be an issue. And up to this point, knock on wood, this has not been an issue because we have much warmer temperatures. And to put it into context, it's about 10 to 15 degrees above the prevailing 30-year average. So that's a meaningful move, and that does allow the country to build stockpiles of natural gas liquids, crude oil, things like that. Now, the one caveat to all of that is as we look forward, and again, I am not a weatherman. I don't know how this forecast is made, but it is suggesting that this will not be long-lived, these warmer temperatures, rather.